Hello, I'm Diane Trees. We've gone from leading the country in foreclosures to a booming housing market once again. Appreciating values of existing homes and super incentives like swimming pools for new construction are monthly occurrences. Anthony Crocco, Regional Director of Metro Study, a leading provider of market information for the residential construction industry here in Central Florida, joins us now. Anthony, welcome for the show.
Thank you, Diane. Thanks for having me.
What is Metro Study? What's the organization about?
Metro Study is a company that specializes in real estate research. Very specifically, we create a Google Maps of all housing activity, all residential housing activity every quarter. We start by looking at properties that are in the planning process and identify where those are, figure out who owns them, how much they paid, how much the next owner pays, how much the final end user, buyer pays for the house, who's the mortgage holder, and we put that all into a system where people can help understand what's going on in housing. We cover about 75% of all new housing construction in the U.S.
How would you describe the housing market here in Central Florida, what we have right now?
It's a very strong market for the home buyer especially. From a historical standpoint, it's probably a little below what I'd call an average or mean activity rate for Orlando. We're doing, according to our survey of new housing construction, about 12,000, 13,000 starts in the metropolitan area. We should be doing 15 or 17 maybe. All of Central Florida, which includes a bunch of other metropolitan areas, Melbourne and Lakeland and Volusia County and Ocala and Gainesville, is doing around 21,000 housing starts, and that should be more in the 25 to 30,000 range. During the peak, Orlando got to 25,000.
But that was too much, though.
Far too much. Had far too much inventory that wasn't being utilized by organic buyers, people that really wanted to use it. They're flipping it and holding it for investment.
And we'll talk a little bit more about that. I know you said that you do a quarterly analysis, but is it fair to ask you, looking at what has happened through 2016 and now going through 2017, are you anticipating any major shifts or changes and another enormous growth in the number of houses available or bought? Anything striking you?
Activity has been really strong over the last year and a half. The market grew by 20 or 25% a year from the bottom in 2010 till 2013, flattened a little bit, and it was really picked up again nicely in the last year and a half. And I expect that to continue, primarily because we've recycled a lot of the projects that were built in the mid-2000s before the boom ended, before the recession, and we've had to replace those older projects with new ones. So buyers are seeing new inventory at near the same pricing as the old inventory they were seeing just a couple years ago in the market. So we think the growth is going to continue.
Well, when we talk about this area, when you think just a few years ago, we were leading the nation in foreclosures. That's changed now, and rather rapidly, as you've indicated. Are we moving in a sound direction with this? Why has it changed so much?
Well, the lack of foreclosure activity recently is due more to the workouts that have already occurred. We've worked through a lot of the inventory that was out there. The investor market has bought a lot of that inventory from banks and is renting it or has flipped it back to new homeowners.
Now that inventory was the ones that were built before the bubble burst and sat there then.
That's right.
Okay.
Or were owned by people that just couldn't afford it anymore because we lost so many jobs. So the out-migration was so dramatic that the people that had houses didn't have jobs anymore. So that's what went into the foreclosure inventory, and we've worked through most of that now. So the timing of Florida foreclosures was it took longer in Florida because of the foreclosure process than in many other states, but we've worked through most of that, which has helped the new home market because the resale market has a better floor, has a higher floor because the foreclosures have been washed out.
So it sounds as if you are more comfortable with the signs here in the level of growth and the reduction in inventory. It sounds like it's coming along in a more stable manner.
That's right.
Than we've seen before.
It is organic, and the other thing that isn't occurring today is the pure speculative buyers who had no skin in the game. Back in 2004, 5, 6, buyers could buy a house with no equity and were purely speculating on pricing growth, and now that's not as much of an opportunity. So you have to put some money up. You have to be more of a real buyer and plan on either living in it or putting into a rental pool, which we do have some of down around the Disney and theme park corridors.
Well, who is buying?
We have a good mix in Orlando, and that's the good thing about Orlando. We have a first-time buyer who works in the theme park corridors, and some of them are getting pushed out of even the Orlando MSA, maybe out in Lake County, maybe in Osceola, or maybe further down in the Polk.
But you can buy a house maybe with a little more square footage by moving a little bit out of the more centrally oriented places. That's what you're
right.
saying.
Yeah, Orange County is definitely where the peak of pricing is, and it's difficult today to find anything new under $200,000. So to find detached single-family housing, you have to go down into Polk County or in the corners of Lake or Osceola. But in addition to the families, we have the age-targeted buyers, active adults, the senior population that is really growing across the U.S. We have a nice anchor of the very north of the Orlando viewing area with the villages in Lady Lake and Sumter County. We also have a lot of other active adult projects down Highway 27, so that's a good buyer profile for us. We have move-up families and more executive style buyers in our family buyer pool. And then we also have international buyers. Some are formal. There are projects called short-term renter projects where a buyer can put the home in a rental pool and get rental income from that. And the home is furnished and it has a pool and has all the amenities when it's bought. But you can also buy houses in the investment corridor or away from the investment corridor for the employees. And you can still buy low-priced housing and put it out for rent and make a reasonable return on your money if you're a savvy investor.
Yeah. Now, Anthony, you mentioned flippers before, and when I was doing some reading for this, I noticed that that was increasing again. It seems that that was a hallmark that had occurred right before the housing crisis happened a few years back. Is flipping necessarily a bad thing, or is there an element that's always going to take place? Do you see it building again? I'm worried about things.
Yeah, and I think it's a good thing to worry about. The ability to flip is more difficult because you have to have a hard deposit down, whereas in the old days you were putting no deposit down. The pricing growth is not what it was at the end of the boom. We had a confluence of things in addition to investors and speculators. We had these hurricanes that brought a lot of people to come to Orlando to work and to rebuild. So we had a lot more people looking to buy houses. So we had a hyperinflation in home pricing because of that. So people were more easily willing to take the risk, to take advantage of that. You don't see that kind of pricing growth today. So even if I buy a house today and it can't be delivered for 9 months, it's only going to go up a few $1,000s in price, so I don't really have a lot to gain by flipping it to someone.
Yeah, again, a sounder basis. One of the other things that I've noticed, that builders seem to be offering some pretty big incentives, like swimming pools even, to purchase new construction. Is that a common practice, a sound practice?
It is a sound practice for the builders and common based on the market conditions, and we're at a point now where, as I said a few minutes ago, we're replacing a lot of communities that were built in the mid-2000s with new inventory, very attractive, but there's also a lot of those projects. A lot of builders have new projects, and there's a lot of competition, and so to create activity and induce sales, they provide those types of incentives.
Right.
The market's really good for the home buyer right now. It's a little tougher for the home builder because of their competition with each other.
Right. You mentioned a little bit about what I would call design trends, but what about lot sizes and square footage? Are we still decreasing those? Are you seeing any changes?
Not so
or
much,
it
and that's
just
a
depends
very
on who
good
you
point.
ask?
That's a very good point. When during the bust, everything compressed. The lot size, the value is all compressed, so it made more sense to get a bigger house and a bigger lot size and bigger square footage because the values were all compressed. Now, as the market's rebounded, the values have extended, and so the value of the underlying lots and land are more expensive, and the cost of labor and materials have gone up. Labor is definitely an issue in the marketplace. So the ability of builders to create attractive product on smaller lot sizes has become more pronounced. We're seeing lots that we only saw in Southeast Florida, 32 and 34 and 35-foot wide lots with 20 or 25-foot wide houses on them, which are small houses from a width standpoint, but you go up 2 or 3 stories and you can get 2,000, 3,000 square feet and create multi-generational households, which are very attractive in Orlando with the theme park and retail trade workers. There's oftentimes the desire to have multi-generational first and second generation Americans, so English, non-English speaking natives. So it's good and it's sound, and again, you see it very much so in Miramar and Northwest Miami and Southwest Broward County.
Now you mentioned labor, and one of the other things that I keep seeing pop up is warnings about an impending labor shortage. Do you see any of that? Has that begun? And what would that mean to our housing market here? I mean, things are going along. It sounds like all the factors are lining up to be a healthy market here.
We are seeing that. Definitely there's the exodus of labor in 2007 and 8 when the market recession took place has not been fully resolved, and because of that you can see the construction time frame increasing. We count houses in the construction cycle in every project, and over the last 2.5 years we've increased our activity by 30%, but the number of houses finished waiting to be occupied hasn't changed. The number of houses being built in the construction process is almost doubled. So the construction process has increased, the time to finish a house has increased, which hurts builder margins. And there's really not a lot of end in sight when you look at the unemployment rates locally. They're very low. So that is an issue. Will probably cost margin to the builders, will cost a few more dollars to the home buyer ultimately.
Something to watch. Anthony, thank you. This was fascinating.
Thank you, Diane. Thank you for having me today.
That's our show for today. Thank you for watching. I'm Diane Trees.